Hello again and welcome to Pearl Magazine. Hong Kong had a busy November with big international events like the Global Financial Leaders Investment Summit, Start Me Up, and Fintech Week, all running back-to-back concurrently with other events throughout the month. Hong Kong Fintech Week is deemed a resounding success for the city. I stopped by to check out the event. With Hong Kong bustling with visitors for so many events this month, the first thing they might notice is that taxis still require cash. So this company is hoping their QR code payment system will finally transition taxis to cashless payments.
So let's say this QR code over here, and you can just use that to scan, and it will jump you to a payment link. So you see the payment link, this would directly link to the taxi meter. For example, it's $27 right now. You can just scroll down to see any of the payment methods. I can just double click. Oh, so it's paid now. And then I can see that over here immediately becomes green. So you don't need any communication with the driver, right? They know it's paid if it's green.
Ronson Chow of Wonder says there's no need to download an app for this, and they've already gotten 200 taxis using the service out of the 18,000 in Hong Kong. He said convincing them was the toughest part, since digital payments normally charge a commission and drivers prefer cash.
We do not charge the taxi driver at all. They get, if it's a $100 bill, it'll be $100 for the taxi driver. So we charge the consumer side a small percentage. Consumers has been tipping and rounding up a bill the entire time anyway. It's effectively embedded commission fees. Effectively, they're just marking up when it's a digital payment. You can just click, select the payment method. Confirm payment, and it's already automatically embed the commission fees, zero loose change.
He says by the end of the year, they expect to have 1,000 taxis with a service, and by the end of next year, 10,000. And once you arrive at your destination, you can use an app to navigate your way around the indoor space. So how does this work?
It will ask me to scan one of these codes. That's what will help my phone understand where I am. Let's say, for example, that we are looking for the media lounge.
Okay.
There we go. Then we can see it like this.
Oh, great.
And we just navigate to the lounge like this.
This is exactly the kind of navigation I need. A line that will take me exactly to where I want to go.
Here we go. We found it.
Perfect. So easy. Good for people with bad sense of direction.
We hope so. It helps people make the most out of the conference.
Nils Pill is the CEO of Oki Labs, a company that allows indoor spaces to be mapped using QR codes. He says in the West, they see use for the technology in gaming. But in Hong Kong, with 4,000 plus buildings over 100 meters, in comparison to New York's 900, the technology sees potential for mapping the city since it works better in a place where GPS isn't as effective.
I think almost certainly Hong Kong will be the first city in the world where people adopt AR glasses, because the everyday use case of navigation here is so pressing. GPS is a line-of-sight-based technology. So when you walk on the street, you get very, very bad GPS signal. You can be off by several blocks. So GPS is already a very dated technology, and we need something better than that.
He says the spatial computing technology is also good for retail companies that do deliveries.
If you're ordering your groceries online, for example, picking up that order takes time, and that is time that on the clock for the retailer. So we help the retail associate pick up the items in the store faster so that the delivery can also get to you faster and the store can keep a better margin.
Fintech Week ran right as the Sam Bankman-Fried case came to its conclusion, and those in the crypto and digital assets industry were happy with the outcome.
It is kind of poetic justice, isn't it, right? Today, it was a judgment, and a really fast one where he was guilty of all charges. It's also making it crystal clear that it is a case of fraud. right? It's not a case of the industry. It's not, is it crypto? Is there something wrong with blockchain? Right? That's kind of what people were trying to say. 1 year ago, Bitcoin was around $20,000, and today Bitcoin is around $34,000 to $35,000. I mean, that to me is almost a kind of poetic description as to how the industry has evolved from 1 year of a really dark chapter to the closing of the opening of a new chapter.
Yat Su, founder of Animoca Brands, says that Web3's utilization of tokens will allow people to own their data. So one can break down their identity into different tokens: name, date of birth, address, bank account, health records, allowing the individual to share just small parts of their data as necessary. He says this in turn will allow you to own content that you share on different platforms, whether it's your data to an institution, a research paper, or your photos on social media.
When you're sharing data, that data has value. I mean, if we didn't share all this data today, then you wouldn't have OpenAI, you wouldn't have ChatGPT, you wouldn't have self-driving cars. This comes from all the data that we're actually giving out freely. And actually, we should be paid for that.
He says tokenizing social networks is something he thinks is important since it gives users ownership.
If you were to tokenize a social network, every time you post or participate, you could receive a form of equity or a form of value through tokens. So essentially, imagine every time you're posting something on Instagram, through tokenization, you're not being paid for it, you become kind of a quasi sort of stakeholder in that network. So that's basically what's possible with blockchain.
Tokenization isn't being limited to social networks. Citigroup estimates the tokenization market could grow to $5 trillion by 2030, covering assets such as bonds, property, and private equity. During FinTech Week, the government announced a series of updated guidance for tokenization of funds and bonds for retail investors.
Yesterday, the SFC just issued 2 circulars. One is on intermediaries engaging in tokenized securities-related activities. The other circular is on tokenization of SFC-authorized investment products, so that the industry will be fully informed with clarity about the regulatory expectation from an investor protection perspective. As an international financial center, Hong Kong is already in the leading position in Asia, right? If you look at traditional finance, be that bond issuance for Asian entities or international bonds issuance, the scale of our cross-border wealth center, we are the biggest in Asia. So that gives us the benefit that with that scale, we can help connect Web3 with traditional finance. And the other dimension is that we are never shy of providing the right regulatory framework for business to prosper in FinTech.
The government has also doubled down on plans to make Hong Kong an international crypto hub. Joseph Chan of the FSTB says we can expect stablecoins to be regulated in Hong Kong very soon.
We intend to launch the regulatory regime on stablecoin within next year. So that's our current target.
And for on and off ramps for crypto and fiat currencies, Chan says traditional finance is being consulted in the role they will play.
We do see certain needs and demand in terms of for banks to be more involved in the digital asset type of businesses, so that in terms of for banks' provision of digital asset custodian services, the industry is now being consulted on HKMA's guidance to ensure that client assets are adequately safeguarded and that the risks involved are properly managed.
Linda Zhang, head of Global Web3 Strategy for the Crypto Council for Innovation, formerly on the board of the U.S. Federal Reserve, says regulating stablecoin in Hong Kong could be good for the local currency. What impact could it have on Hong Kong if Hong Kong regulates stablecoins and, gets them into the system?
I think this is a very exciting time for Hong Kong to be introducing its stablecoin rules, because Hong Kong really sits at the nexus of a number of payment corridors. And so if it gets this legislation right, Hong Kong could very much position the Hong Kong dollar as a very important monetary instrument in the corridor payment systems with renminbi, with the yen, with the US dollar, and then also remittance corridors like the Philippines.
She says that the Hong Kong regulators' clear guidelines on the regime and legal framework of the digital economy are putting it at the forefront of finance and technology.
I think Hong Kong will serve as a really important nexus point along the public digital infrastructure rails that go from Hong Kong to Southeast Asia, to Japan, China, Taiwan, also to Europe, to the US. That digital infrastructure is really critical right now, and it is what requires a public and private collaboration to build.
She says she expects to see momentum on central bank digital currencies, or CBDCs, around the world. But while governments might issue those, she also expects that privately issued ones, essentially stablecoins, will be on the rise.
I think what will happen is, as money becomes programmable, and programmable using our personal data, we will have probably private issuers, like banks, for example, or other types of issuers of stablecoins that we can program, and that layer of stablecoins will sit on top of the layer of wholesale CBDCs. Another model could be retail CBDCs, where the central bank is issuing CBDCs directly to the people, but that means you're also knocking out a whole layer of banks and other potential financial intermediaries.
When we return, opportunities for Hong Kong in the development of the Islamic economy. Stay with us. Welcome back to Pearl Magazine. It is estimated that a quarter of the world's population are Muslim. This huge population base brings many opportunities for the development of the Islamic economy. However, it's not easy to break into this economic system. Tonight, Pearl Magazine takes you to Malaysia to learn about a country which is known as an Islamic economic indicator. We also look at the Middle East, which has close economic and trade relations with Hong Kong. Muslims must strictly abide by religious rules and regulations. Everything from diet, medicine, cosmetic products, to financial services must comply with their specific regulations. Manufacturers around the world must have halal certification if they want to sell their products in the Islamic economy. The Department of Islamic Development Malaysia, or JAKIM, is the local authority responsible for regulating and implementing the halal certification system. To obtain halal certification, in addition to submitting documents to prove that the product's raw materials and production process comply with the specifications, the product's storage locations, and even the tools for handling the products must be supervised as well.
The halal certification is not the compulsory. Okay? It's voluntary basis. It's up to the industry. For JAKIM, we will serve whoever submit the application. If you don't want to apply, it's not a problem. You also can sell your product, but you cannot declare that the product is halal. As a marketing tools to their consumer, to the buyer, that show that the product have the extra value compared to the others. So that's why they can market their product easily.
Due to the rigorous system of halal certification, consumers have more confidence in the quality of certified products. In fact, the number of applications for halal certification from the Malaysian authorities has continued to rise in recent years.
In 2021, the numbers of application is around 14,211. And last year, in 2022, the numbers increased to 14,779 applications received by JAKIM from the industry. So the increment is around 3.9% for 1 year. And it's going to be higher and higher. That's what we look. If we maintain around 4% per year, you can imagine that is going to be increased year by year.
Apart from Malaysia, countries such as Indonesia, Singapore, the United Arab Emirates all have official departments or certification agencies to authenticate halal products. Currently, Malaysia is cooperating with 48 countries and a total of 86 certification departments and agencies to recognize each other's certification standards. According to a study on Islamic economic development, in 2021, global Islamic spending on food, drugs, cosmetics, fashion, travel, and media reached $2 trillion, an increase of 8.9% from the year before.
There's a list of countries, the larger importer from Malaysia halal product, including China, Japan, and then the neighboring countries, including Thailand and so on. Especially all the Muslim countries, they are looking for importing halal product for their consumers to enjoy halal product in their country. But China is number one.
The food, pharmaceutical, and cosmetics industries need to obtain halal certification that is officially recognized by the government. As for financial products and services, the Malaysian government requires that as long as companies obtain certificates from individual international Sharia consulting companies, they will be regarded as eligible for certification.
You see the personal information, we need to tell our customer.
For instance, this Malaysian technology startup has hired a global Sharia consulting company to certify that their products comply with Sharia principles in order to attract Muslims to use their services.
We have our Sharia scholar that oversee, audits our operations, the way we classify things and so on. So in our website, we show that certifications so that it gives confidence to other people. Really allow Sharia compliant products, financial products to be on the platform, right? So we just want to take away the headache of figuring out whether this is Sharia compliant or not.
Dang, who studied in the UK, found that there were very few services for Islamic finance found in both the UK and Malaysia. Spotting this market gap, he and his partner opened a company in London in 2019. The application they developed has added many functions to facilitate financial management for Muslims. For example, it is stipulated that when the accumulated wealth of Muslims exceeds a certain limit, after excluding debts, part of it must be donated to pay zakat, a type of Muslim tax. This application helps calculate that amount.
Try to calculate that for you, and you can give your zakat easily from our platform and so on. For average Muslim on the street, they don't know this and they don't know where to get it. Probably it's hard to get and so on, right? So we try to help in terms of discovery of the products.
According to Islamic creed, several types of products, such as pork, tobacco, and alcohol, as well as industries such as weapons, gambling, pornography, genetic engineering, are prohibited from being traded or invested in. In order to avoid accidentally investing in these types of products or industries, they have also added filters for stocks that comply with Islamic creed.
In the Muslim world, there are 5 standards that most people agree on. But this standard can differ from one another. So it helps Muslim investors to invest more confidently. And we also have the features of calculating purification. Let's say certain parts of the revenue is not Sharia compliant. We calculate for you how much do you have to give away to purify that wealth.
Dang says that they are discussing cooperation with local Islamic banks in Malaysia, hoping to have an application that can directly connect to bank accounts and use transaction records to perform personal financial management functions like British users. In addition to B2C, they also have plans to develop B2B models.
We are going to further serve the UK market by offering more products and so on. And also, probably on the B2C side, expand to Europe and America because in the Western world, I think there's a gap in terms of Sharia compliant products. On the B2B side, we are going to expand our products, right, and then offer it to more geographies. So we are now trying to break into the Middle East, trying to get banks there to use us and so on.
As for the Middle East, Hong Kong has close economic and trade relations with these countries, such as the UAE, Saudi Arabia, and Qatar. According to data from the Census and Statistics Department, Hong Kong's overall exports in the past year have decreased by 8.6%. But unexpectedly, exports to the Middle East last year performed strongly, rising by 23.5%, an increase of more than 20% for 2 consecutive years.
In fact, the United Arab Emirates itself already accounts for a large part of the trade between Hong Kong and the Middle East. In fact, 70% of our bilateral trade with the Middle East is with the UAE, and in terms of exports, the UAE's proportion is even larger. It accounts for 3/4 of the share going to the Middle East.
Watches and jewelry and communication equipment are the most important types of goods traded between Hong Kong and the Middle East. Edmund Lowe says that Hong Kong and Dubai are also positioned as entrepôts and can have more cooperation opportunities in connecting the markets of Asia, the Middle East, and Africa.
The United Arab Emirates also has a high re-export ratio. More than 40% of their total imports are re-exports, and Dubai is one of their free trade ports. In some free zones, the ratio is actually as high as 90%. So some local logistics industry people also told us that they hope that some logistics industries in Hong Kong and the Middle East can cooperate. That is, using their respective advantages in their respective regions to integrate Asia products to markets in the Middle East and Africa.
That's our show for this week. Join us on Pearl Magazine, same time next week. Bye for now.